Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Monday, July 24th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, the ES remains near highs after the recent rally up. Very strong move through the 2450s, is now holding at highs over the last three plus days, and there's now sell stops below recent lows here. Again, what we've been watching for is failed new lows in the uptrend, and we'll be watching for the same again. If price were to push down into say 2460 and fail to hold below that zone, we could be looking at a squeeze back toward recent highs. A break back below 2460 and a failure to get back above it would suggest perhaps a return back toward 2436. But again, this has been a very bullish market. Pullbacks have been defended, and that really hasn't stopped just yet. So right now, still uptrending market. We have a clear zone to watch, 2462s. A break below it could offer a trap opportunity back up. Failure to get back above that zone, if it were to get below it, could open the door to a multiple day move back toward recent support and value. All right, let's take a look here at the intraday time frame. Looking at the intraday here, you'll notice mostly coiled up behavior right now in the recent trading. And basically holding at these levels here. Let's get it up to normal there. You can see price just holding at these lower levels. We took the previous week's close offered, and since then we have resistance at 2467.5. We have support down here near 63.5, and right now that's the short-term range. VWAP is flat, R3 here, S3 here. So short-term rotations down, short-term rotations back up. Again, we're watching 62 to 60. So if price were to break down below that 62-60 zone, that could provide an opportunity for bulls to trap or for continuation to occur. So down here, that LVN is going to be very important, and breaking down below that zone is going to be a decision point. Either bulls will trap and we'll see a return back up towards 75, 76, or failure to hold 60 opens up more weakness down below. So that's going to be the level to watch. Let's take a look at crude oil. Here's crude. The previous session we had quite a sell-off. It led to a day that led price back toward composite value. You can see here, this is something I've been talking about for a while. I feel like a broken record sometimes when I say things over and over, but sometimes that's the market we get into. And price has been chopping around composite VPOC for a while now. It's shifted from 45.66 to 45.70 now, and you can see that price is never too far away from it, right? Comes back, chops to it, goes away, comes back, chops to it, back, right? So right now, that's why I mentioned there might not be a breakout either way. We might just continue to be trapped around VPOC for a while, but that's an energy building phase. And that could spark the next major move at some point when things are ready to move. So right now we kind of have this ascending pattern here. Expect more chop and coil around it. So it's very difficult to really provide actionable analysis right now other than prices trading around VPOC. We could drop a little bit more into 76. If we do, bulls would look to pick it up and bring it back up. If it gets back toward 47.65s, again, it could be an opportunity to bring it back down. That's just a pattern right now until we see expansion. And when we do, it could be to the upside as we've pretty much exhausted the lower edge of this range. All of this energy right here could get released to the upside and we could get a rally back up at some point. But right now, still chopping around VPOC, so you have to be careful. If we take a look at the intraday time frame with crude right now, right here you'll notice, again, after the recent drop here, price is pretty much traded back and forth and no real pattern here today, just kind of back and filling. Here's the previous sell-off, and right now we're mostly trading in this range right here. So again, no real discernible pattern here to really play off of. We can see that the PIMAs are pinching somewhat here, which tells us that we could continue to coil in this range with VWAP mainly flat. And at some point here, we could see another move outside of this range. But continue to watch for fade the edges type of behavior. 46.30 down to about 45.40. That could provide some decent edges here in the near term. All right, let's take a look at the NQ. Mostly a chop trading range in the lower time frame here, but in the higher time frame, we've seen a very nice rally, very significant squeeze off the lower edge of the key range. Very nice move up. Now we're holding just above the top of the key range. Multiple day range up here, very narrow. Again, this is showing a loss of momentum, at least a little bit here, as this thing has rallied nicely and now been kind of trapped and stuck just at the recent highs. This could provide another opportunity to fade it back toward the 57.29s, which is the midpoint of the key range. But keep in mind, this trend has been quite bullish. Pullbacks have been buying opportunities. I mentioned before that this range could play out throughout much of the rest of the summer heading into August. So, for the most part, we could see a move right back in. But this market has been quite bullish. And whenever it does see expansion, it has seen a continuation toward the expansion target. So whenever we are ready to see expansion out of this range, we're going to be looking for expansion towards 62.64 and 60.86. Those are the next two major upside targets. All right, looking down in the lower time frame again, you have to be mindful of the current trading range. The trading range provides multiple days here with great boundaries where it's been fading back and forth off of. And again, the goal here is not to really engage at the center of the range. There's no real edge there. That's where value is. The goal is to engage out toward the edges. So if price were to drop down into 85 to 90 to a new low into the LVN, that's an opportunity to look for a fade back toward value, 59.17. If price were to come up toward 49.40, since it is the counter trend edge in an uptrending market, you have to be more careful. But this is also an opportunity to fade back toward value. So keep an eye on that range throughout the session today. Lastly, looking at gold, we've seen quite a bullish rally on our hands in gold. We were waiting for that time where things would turn around and head back up, and we finally got that time 2 Fridays ago. Right here is when things started to form a seal here off the 12/12s, trapping late participants below here. We started to see some nice strength here, and that's really what we're looking for in order to start indicating a move back toward 12.50 and 12.59. Those were the two upside targets we were talking about. We reached 50 recently, 59, very close to reaching that level now today. I mentioned that those are the quick two targets to reach, and once you do, we might see price come back across range. And start chopping around that VPOC a little bit more. Very similar to what we've seen in the past. You get out here, you chop back toward value, then you chop around it. You get out here too far, you come back to value, you chop around it. Same thing here. So right now, we've reached both of those key targets. This one needs another point or so from the high. But once we do, there could be a pullback where this thing trades between 29 and 64 for a little while before it sees an edge back up or perhaps back down. I'm under the impression here that we'd likely continue back up toward these highs after we chop for a while. So just keep that flow in mind. All right, that's it for now. Let's see how this thing plays out heading into the new week of trading. Good luck, trade well, and happy Monday.